Good news for Plug Power today. The company issued a press release. They're starting to deliver electrolyzers to one of their biggest projects. Stock is up about 14% on this news and has almost gotten back to the highest price that it's been at this year. Stock's up over 20% year to date after a really tough period where it was down a tremendous amount. But there are things that investors really need to think about despite this good news before they go whole hog into investing in Plug Power. I'm Jason Hall. This is Investing Unscripted. We're going to unpack the latest news, what's going on with the business, and talk about the biggest concern that I have that investors need to be very aware of before they consider buying and owning Plug Power stock. This video is sponsored by the Motley Fool. If you're looking for even more great stock ideas, I can tell you they've got some good ones. Go to our special link. It's fool.com/unscripted. Go check out that special link. You can get access to the Motley Fool's 10 best stocks to buy right now. Some great research on the companies that they follow. You got the Motley Fool's long-term track record backing it all up. Okay, let's take a quick look at the press release that's driving today's news. The short version is that Plug delivered the first electrolyzer in what's going to be a much bigger project. It delivered basically 10% of the initial 100 megawatt green hydrogen project at a refinery in Europe for Galp, which is a large Portugal-based energy company. So the short version is that this is step one in a process that is expected to offset about 20% of the hydrogen that the refinery, the gray hydrogen, which means that it has an impact that carbon is still being released into the atmosphere. So it's a big step, as the executives at Galp describe, towards decarbonizing the Sines refinery, which is part of their long-term goal. Now, this follows more great news that came out from Plug recently. They've really struggled with their green hydrogen production facility in Georgia. And over the summer, August was a record-breaking month, producing over 300 metric tons of green hydrogen, very high uptime, and a very high efficiency from that facility. And that's good. Now, the company's talked about for a while how it's so important that their green hydrogen production is going to be a major input in helping drive down their costs. That's really important for Plug to be able to do. Now, it's such a big deal that they announced about a week ago that they're going to have a big investor event with institutional investors to come tour that Georgia plant. They're really trying to show the market what they're trying to do in terms of being a leader in the green hydrogen economy, and they are making some steps in that direction. Okay, so there's a lot of positive there for Plug in what's been a really brutal past few years. Of course, the question, if you watch other videos that I've done, the videos I've done with Tyler Crow here, you know we've been very, very skeptical of Plug Power, and for good reason. Plug Power is not a brand new startup. This is a 25-year-old company that has never made money. Again, 25-year-old company that's never made money. Investors, if you're looking at a company that's been around for a quarter century that has literally never made money, you should be skeptical, okay? No matter how great of a story they tell. And Andy Marsh is a great storyteller. The CEO, he's been there for over a decade at this point. He's done a great job of telling the story of Plug's future in the hydrogen economy. Now, that story has never equated to making money. The stock price, as much as it's up here more recently, is still way down from where it was. And if you look at the company's historical cash flows and constantly selling more shares to raise money, again, you should be very, very skeptical. So I think even with this positive news, investors should remain skeptical. Let me explain why and encourage you to at least think about these things before you back a company like Plug Power. Because if a company like Plug Power is going to be successful, investors should make money. You should make money. And over the long term, that just hasn't been the case. A lot of investors have been lucky to trade the stock and make some money on trades, getting lucky with the timing, but there's still a lot of risk with the company. Okay, we'll start with revenue, the top line, right? The money that's coming in the door before you pay your cost of goods sold, and then you have some margin dollars, gross margin left over that you're using to pay operations and R&D and all of those sorts of things. Anything left after that is earnings. So we're finally starting to see this year revenue starting to creep back up. After just a really tough year and a half of revenue declines from the peak, revenue is starting to grow again. All right, so that's good. That's a step in the right direction. But we need to take a look at cash flows. This is really important because, again, cash from operations, that is, I'm going to take the revenue line off of here just to make it easier to be able to see. So cash from operations, that's the yellow line here, and the free cash flow is the purple line. So what did that mean? Cash from operations. This is cash left over after you've paid essentially all of your expenses. Free cash flow is cash that's left over after you've paid all your operating expenses and then paid capital expenditures. Okay. That's what free cash flow is. It's literally free cash that's left over to allocate as management sees fit. Here's the thing. Negative, that's really bad. Negative $600 million in operating cash flow. Again, the company is bringing in $672 million over the past 4 quarters. Even after that revenue, it was still negative $600 million in operating cash flow. That's $1.2 billion delta between its revenue and its cash expenses, right? That is a massive, massive disparity, and negative $819 million in free cash flow. So again, that's another $200 million that it had to spend on CapEx. All right. So that's brutal. Now, why is that important? Number one, it's got to get cash. It's got to get money to pay for things. So I'm going to drop some stuff off of this slide and I'm going to put on a couple new things. So what do we have here? We've got total long-term debt and cash and short-term investments. So again, those negative numbers we saw from free cash flow and operating cash flow, that's the reason the company has gone from having $4 billion in 2021 to $336 million right now. And at the same time, its debt has increased from, call it $500 million to about $1 billion in debt now. So the company's cash has been depleted massively and its debt has gone up. Now, there's another thing that's gone up too, because all of the cash that it's depleted and the debt that it's taking on, it's been brutal. How's it made the numbers work? Selling more stock. The share count has essentially tripled from where it was back in 2020. The company smartly, when the stock price was very high in 2020 and 2021, sold a lot of equity to raise cash. But again, that $4 billion cash, it has blown through that cash and has less than $350 million now. It had to continue to sell shares, even though the stock price, we'll add that to the chart, even though the stock price continued to fall. As a result, the percentage of the company that shareholders own today on a per share basis has continued to shrink as they've had to cut the pizza into more and more slices, right? Issuing more and more shares to have to sell to raise money to cover expenses. Okay, all of that to say this. Can Plug Power make it? Sure. We see progress. The company has made progress. Can investors make money along the way? I think the jury is still way out. We haven't seen the company be able to make money for shareholders literally ever in a sustained way. We saw the stock price shoot up to over $40 a share back in early 2021, and now it's $2.68 a share. And it fell down to penny stock territory earlier this year. The company hasn't shown that it can make money. So my best suggestion to anybody that's looking at Plug Power, sure, follow the story. If you want to take a really small starter position to help you track the business, knock yourself out. But before I would put any meaningful amount of money in the business, I would actually want to see financial progress, getting margins better. Can you take that green hydrogen facility in Georgia and actually lower your cost of goods? That's the whole point of it. Until we see a quarter where it's clear that they're driving cost out of their business, as revenue starts to grow again, they can drive cost out and start generating positive gross margin, positive operating margin, then we can talk about this as being an investable business. But until that happens, I think investors have to be super skeptical that Plug Power can be a winning business and a winning investment.